Hello guys, good morning. Today we're gonna be going over the week's price action and trying to understand a bit of what happened. How could we take an advantage of the week? What kind of trades could we encounter and more, basically. Let me put this as it will help a bit. So this is a little bit of an indicator that shows the sessions. And we just won London and New York. And so that's from that. New York is from 7 to 11 and London is 2 to 5, isn't it? I think it was. Yeah, okay. That'll make it easier for us to basically know what to look for or where we are standing. And yeah, let's go to Mondays. It's Friday, Thursday, Wednesday, Tuesday, Monday. Okay, Monday I think was the cleanest day of them all. We'll see, but I'm pretty confident that it actually was a pretty good day overall. And due to the things that we'll see in just a second. Okay, so I started analyzing at 7, right, which is this the beginning of this rectangle. So I started analyzing at 7, and as you can see, price has gone higher, has gone lower, but what you can clearly see here is this. Sell side liquidity, below its lows, swept and aggressively gone higher. Little bit of a range, liquidity, sweeps that liquidity, aggressively going higher, which causes for price to create a fair value gap in the 5, right? The price trades into and starts going higher. What does it do immediately after? It creates another 5-minute fair value gap that basically makes price to continue to go higher. Then we have another 5-minute on this, and that'll be all that we get. Session opens on this candle, so let's mark it like this. And that is pretty much it. So how could we determine that the session was going to be bullish, or why would we thought that the session could have been bearish? As an example, this day I actually thought the day was going to be bearish. I don't remember taking a loss, although I might have. I think I did end up taking a loss. Yeah, we'll discuss it now. We're in the 15-minute time frame. That's also why I'm not seeing much. Oh, that was actually 15-minute or fair value gaps. Okay. Yeah, that made a little bit more sense. Okay, so you can see that there's a 5-minute fair value gap here that is respected. Creates even another one here, respected. Another one there that is actually not respected. And that's something that we need to know. Let me actually just delete this. But you can see the liquidity that we were discussing a bit better as we are in a little bit of a more detailed time frame. So what do we have? London basically swept equal lows, approximately equal lows, and then aggressively starts going higher, right? Fair value gaps all over the place. The price comes back lower, respects here, and starts going higher. But there's another fair value gap here. There's another one here. And what I do believe was key on this particular day is this lows are being taken. And I say that because on phase 1, which is from 7 to 8:30, based on what I believe and what I trade, we tend to see moves against the trend, run on buy side or sell side liquidity, which basically allow us to understand that if there has been a run and stops, we could look for price to create displacement against that move. So if it swaps sell side liquidity, could displace higher to then look for opportunities higher, basically, right? So in this case, we have phase 1 continues with the trend, retraces, takes a low, and immediately displaces higher. Barely takes the low. The low is not very significant, not very important, but at the end of the day, it is a low that was taken with phase 1's price action. So all that it really does is sweeps a low, aggressively goes higher, retraces, and mitigates and respects fair value gaps. So what is it that we have here? Session opens on this candle, as you can see, and it opens basically mitigating a 5-minute fair value gap of phase 1. What is it that we get? Session opens again on this candle right there, continues going a bit lower, then starts trading aggressively higher. Now, there's no fair value gap that I would have traded in here, mostly because price actually doesn't come back to them, right? Doesn't come back into them, so it's not much that we could have actually done. But what it does do, it creates fair value gap on the 5 again here that price later trades into. And oh, this is a line. Okay, I was like, what's that? Okay, so it creates this fair value gap that, going back to the 1 minute, we see causes a reaction. But my problem with this was that it wasn't really showing what we wanted to see, right? We wanted to see the displacement, which we end up getting on this candle. But my problem with this would have ended up my stop loss safely or conservatively should have been here, aggressively below this low, right? Due to the fact that, well, overall that is the candle that has that creates the fair value gap, right? So it's pretty much a theoretical safe spot to place our stop loss, but I always like to have the conservative stop in mind. Then we get this, which is finally like the first displacement or clear displacement in the 1 minute. That is something that we could have taken advantage of, and as you can see, stop loss could have been down here, which was a bit aggressive, but honestly would have been fine and could have been taken, or otherwise stop loss all the way down there, right? Overall, this is the only trade that we could have taken on Monday, and would have been a fine trade, honestly. It's basically, we have pretty much what we need to take a trade that we'll go over the steps in a second. But basically 3 ticks of his stop loss and potentially going above this high, and this is what would have been difficult, to be honest, because price gets so close and then immediately retraces down to break even. I don't know what I would have done. Honestly, probably would have closed at 5R, to be fully honest. 5R is something that I always like going for, and lately what I've been going for. So I would have been just fine, right? Definitely some partials along the way, but 5R is probably what I would have closed at. Otherwise, it would have been painful and difficult to actually hold this entire thing and allow price to retrace and actually give us another opportunity, or to just allow price to basically retrace and not close our entry at break even. Now, it does create another 5 minute fair value gap that if I remember correctly, I never really paid attention to it, and it kind of does create an entry, which would have been this, and would have been a fine entry, honestly. Only problem that I have with it is that my target would have been pretty close to where we are, and its stop loss should have been at least down here, and conservatively down, well, down below this low, right? So yeah, I mean, it would have been a fine stop loss, let's say 50, 56, 58, 57, something like that, and going a bit above this high. So that's 2.2, which is definitely probably something that I would have avoided, right? Something that I would have avoided due to the risk to reward ratio mostly. But again, another opportunity based on what we trade, so that would have been fine. So again, why could have we bought from, as an example, this entry, which in my opinion is not an entry that I would have actually taken due to how it's created. If this exact same displacement would have happened here, right, when it mitigates the fair value gap and everything, then it would have been much different, right? In this case, it just goes higher, barely moving, and then finally causes the aggression, right? It's just something that I don't really like, being honest. Reasons why we could have bought or could have believed that the session was likely going to be bullish is the liquidity taken previously. So we have a couple of equal lows, aggressively taken, aggressively goes higher, right? Creates another tiny bit of a range, aggressively takes that, aggressively goes higher, comes back lower, mitigates fair value gaps, respects that, creates more and more, and well, more basically, right? What is it that we get through phase one? Phase one takes sell side liquidity, and immediately after we see that after that sell side is taken, we see aggression higher, and again, fair value gap trades into that. The 1 minute would have not given us an entry on this one, but it does create another 5 minute that generates the entry that we again could have taken, and would have been difficult for multiple factors. The way that the 1 minute is created, the way that price barely misses the target and completely retraces into break even. Multiple things that would have made this a complicated trade that could have definitely worked out depending on how we would have managed it. Again, complicated, possible, and all. So that will be Monday, right? Yeah. Okay, so let's jump onto Tuesday 9th. And that's the end of the session. As you can see, kind of ranged. I do believe I mentioned that when London or anything before New York is has a lot of impulse, a lot of aggression, what tends to happen with that is it's like I think about it like an energy thing, or just it gets tired, price gets tired, and it just doesn't really do much through New York's session. That's the way that I call it. Of course, there's probably a better way to say it, or an actual name of it, but basically when there's too much aggression before New York tends to be a little bit complicated. Now in this day it was complicated. There was an opportunity to be taken, if I remember correctly, but yeah, we'll see. So why would we believe it was bullish? Not many reasons to really think that, but price has been bullish. You can see that it has been bullish. That trend has not changed just yet. London was quite aggressive. London was quite aggressively going higher, but it didn't really sweep any clear liquidity area, right? It doesn't really sweep anything important. We could say that this couple of lows are swept by this move, and then that begins, or this tiny low to this low. It just complicated. No clear random buys or sells at liquidity in this case. So in my opinion, nothing for us to really do there. Now, what does session do? First of all, I was actually looking for sells due to this. It goes a bit higher, it takes a high aggressively lower, but no fair value gap in the 5 minutes, so we can't really go for that. It begins going higher after mitigating probably 15 or just the 5 minute fair value gaps, and sweeping this tiny bit of a low. No fair value gap until this one, pretty high up, and then price just gets into this range, which basically does literally nothing, right? It does take liquidity. I don't think I mentioned this on the day. It does take liquidity from all of these highs together and all of these highs, right? And even this couple of highs, but there's no clear impulse until we have this, right? And my problem with this was that, well, we do have some liquidity here as well that is being taken. Mitigation of a 15, if I remember correctly, on this. So we could have bought from this area, as of course we could have thought that, well, we have the aggression after sweeping some liquidity from these areas, and we could be trying to sell from this fair value gap that we have right there, right? Which is what I was looking at, but it was already happening pretty late. So after 10, if there's not much clarity of what could happen, I just tend to completely avoid trading for the rest of the day and just take the day off. But this day, as you can see, we do have this, which we'll see in the lower time frames. And again, we had that 15 minute, which if I remember correctly was something like this. I don't really know, but it was basically something like this. Let's just call it this to not really occupy that much. And could have we bought? Yeah, mostly it would have been because of this retracement, potential continuation higher, but it doesn't really make that much sense if you think about it. So yeah. So could have we bought? Definitely. Could have we sold? Probably. So the buy would have been, well, could have been this one, which in my opinion is very, it's just a rejection. Could have worked out, yes, but it's just a rejection. Then we have this tiny bit of a reaction, doesn't have a fair value gap, retraces, aggressively goes higher. First fair value gap is up here, and when it happens so high up after a move, I don't really like it. As an example, I would never take a trade on this with my stop loss all the way down here, right? For me, it doesn't make that much sense for me to take that, so I just completely avoid it and wait for something else. What I was interested on this day was this. I wanted to take it on the paper trading, right? When I saw the aggression, the fair value gap, and the liquidity above this high, that's what I was interested on. But price never really came back into that and just completely goes lower. As you can see, it's basically just nothing. Right, it's basically just nothing that we could have done this day specifically. And yeah, I mean, as the previous video or a recent video that I made said, sometimes it's just a no, you know, it's just don't have what you're looking for, which sure bothers a bit, but overall, not every day is a trading day, and that's fine. So let's continue. we had news this day on the open, as you can clearly see. Let me see, because I do think there might have been something this day. No, there wasn't. I don't even think I traded this completely. Okay. So as you can see here, this is what I was interested on this day, was that there were a couple of equal lows around this area, a lot of rejections, right? And price basically goes through that and immediately starts going higher, right? Which generates a clear potential direction for the day. So we also have this pretty aggressive pre-New York, which means that it just would have been a bit complicated to actually work with already, right, from the start. But as you can see here, it does start going a bit lower. Taking sell side, I was expecting price to maybe create somewhat of a fair value gap in the 5 to then trade, but well, this happened, so it's not much that we could have done about this. And after news like this, I just don't trade. You know, it's just better to completely avoid it. You know, it's just avoid it. You know, just wait for something else, wait for another day, and that's it. That's simply it. In some days we do get like opportunities after news and everything, but it's just most of the times we're just wasting our time, right? Just waiting for something that is very likely not going to happen, or we're just going to end up forcing some opportunities that end up in losses or who knows what, right? Just things that we shouldn't be taking. Okay, so 5 minute again. This is Thursday, I believe. Yes, okay. I think that the best days of this week were Monday and Friday, although I actually didn't check Friday because I wasn't home that on Friday, and when I came back I saw that not much had happened, so I just said nah, fuck it, and didn't even look at it. Okay, so again, aggressive London after taking a tiny bit of a high, aggressively going higher. Little bit of a range. This is something that I do like as an example because it's like it slows down before like getting into the session and everything. So that was cool to see. But it was still a bit complicated because this can happen. But continuation of the trend would have been fine here. So 2 things to mention, right? Phase 1 starts with a little bit of a range, and we also had a range already from before. This highs, this first, and maybe this entire thing. But as you can see, this is taken everything basically, right? I do think I drew it on Telegram like this, like price just sweeping liquidity from all of that trend line, then just going higher, retraces. So sell side, right? Buy side, and retracement to continue it higher. And that's basically how this day could have been traded. But there were 2 issues with this. If I remember correctly, target was one of them because it doesn't take the high. And when it doesn't take a high that was pretty close to it, it's a little bit problematic because we would have definitely targeted that, and maybe could have closed some parcels along the way, or just go for the 5 Rs I mentioned earlier. You know, there's many things that we could have done in this case, right? But in this case, session begins here, which is great on timing because it literally starts the retracement with the opening of the session, mitigates this 5 minute fair value gap, but doesn't mitigate the next 1 minute fair value gap. This could have been a lovely entry in my opinion because we also have the liquidity below, so but stop loss would have been down here. Price doesn't come back into it. There's nothing that we can do. Now, next fair value gap created here, aggressive move higher. If I remember correctly, I took this. A little bit of a high stop, high entry, which is again not something that I love, but overall was looking really well, right? It was looking really well, so I was fine with it. And as you can see, it does start well, but it just immediately retraces, creates liquidity, takes that liquidity, which is cool, right? It's great. But it doesn't create any other fair value gap to trade into. And if you see it, it goes higher, but it doesn't really get that far, right? So could have we traded? Yes, we could have bought from here as I did. I do believe it was only on paper trading though, because I wasn't trading. I almost didn't trade the entire week on the funded, due to the week just being awful, honestly being awful. And this was just nothing that I would have actually liked taking on a fund there. Okay, so it does work out for a bit. If the entry would have been something like this, as an example, we might have gotten some good risk reward ratio. But yeah, would have had to close at the peak, you know. So yeah, 2.44R. Honestly, it's just not something that we would have gone for. Okay, so after that, we have a minor change in the trend, but nothing that we would have taken advantage of for multiple reasons. Being honest, multiple reasons. And if we look at the 5-minute. This is what we have. We have an aggression lower, fair value gap here. Price doesn't trade into it. Does create liquidity though, because I was honestly interested to see if price would trade into this, taking the liquidity, mitigating the fair value gap, and then go completely lower. Right? That would have been great, honestly, because that would have been great. Right? That would have been great. So after that, aggression lower, more fair value gaps, and if I remember correctly, no entry on this. Yes, entry. Okay. So I was looking at this. I honestly was not interested at all into looking at price action already because it was messy, right, and all. Yeah, this ended up working quite well. Stop loss would have ended up this high, and I do believe it went lower than this. Give me a second so we can all see it. Going for 5R would have been there. Let's see if it actually works out or not. Because if I remember correctly, yeah, it does. Yeah. It did retrace a bit too much there. That would have been complicated to hold. But yeah. So what is it that we have? Price was going higher, changes the direction, continues to change the direction. Basically, we have a market shift on this low. No liquidity sweeps except for of course, this, which I don't really consider that much. And then this is created, and the lower time frame entry was quite clean, as you were able to see. That would have been a good trade, but complicated because it's at the end of the day, price action through the day was not that clear. Probably would have taken a loss on that buy. So just a no for me, honestly, this entire day, and the only thing that we could have actually done is take this out, which again, not really a fan of, and probably would have ended up in a break even, so it is what it is. But again, based on ourselves and concepts, we did get many of them. We have a couple of sweeps on liquidity, continuation higher. We do have some buying entries, just complicated ones due to price not really impulsing that much, honestly. Well, it is what it is. So let's jump onto Friday. And Friday is actually going to be a first for me as well, because I don't really remember much of Friday's price action. I do know it went lower, but I don't know how it went lower, and if we could have taken advantage of some. Okay. So, no liquidity sweep, except of course it's tiny bit of highs. Starts going lower aggressively, retraces. There's a fair value gap here. This is the 15-minute time frame. Keep in mind that. So tiny bit of a retracement, mitigates forward block, mitigates this low, tiny bit of a fair value gap on here, too low in my opinion. And then aggressively lower, another fair value gap, mitigated through the beginning of phase 1. That's cool. Because it's also a tiny bit of a run on liquidity for sure. Yeah, this high. So see, that's really cool. And this is great. This is actually a pretty good price action. I don't know if we got any lower time frame entry stuff. So what do I say this? So we have a fair value gap. Trend is basically quite clear due to price just going lower, right? Just creating those lower lows, lower highs, and everything. And here it creates a fair value gap on the 15. Price mitigates that through phase 1. So phase 1 is run against the trend with this move, mitigation of a fair value gap from pre-New York basically, and a run on liquidity. Right, so we have a lot of things in our favor on that, and then immediately after, which is the most important thing, it creates fair value gaps, right? So displacement that is taken here. Now, what happens through the open? The open is here, right? But right before the open, this is the open. Right before the open, it goes aggressively higher, sweeping high, and then the open creates more fair value gaps that are traded in here. And if I remember correctly, I did check this, no lower time frame entry. But let's do it like this. Have this. run on liquidity. And if we would have traded on the 1 minute, yeah, we do get an entry, tiniest entry of all though. Definitely a loss on this. And I'm not sure if I would have gone for this after taking that loss, being honest. I don't really think I would have done that. But yeah, there's a tiny fair value gap on this. Stop loss up here. Target was going to be complicated. Below this low, we just have 3R. Wait, oh, we can go below this low to 754. Right there, but that's 3.42, so it's also complicated. I don't think I would have gone for that, being honest. Maybe just the 5R, which I would have gotten it before that retracement. So yeah, I think if I would have taken this, that would have been fine, right? So entry based on run on liquidity, pretty close to the open. I might have missed it by waiting for the open to occur and then looking for the entry. But the entry had, so session opens on this candle here, which means that at that point we could have taken the entry as soon as the session began. That could have been an idea. Yeah, I mean, not the greatest thing that we could have found, honestly. Not the greatest thing. Yeah, no, I don't think we would have taken that one due to the fact that it's a very tiny fair value gap, and we've just taken a loss on this because I'm definitely taking that. All right. But it is what it is. After that, I do believe there was a 5-minute fair value gap here that's mitigated on this, but it doesn't really retrace to mitigate a fair value gap, so that would have been a no-no for me. And what else? That's pretty much it, isn't it? There's an entry here. Actually, was there... Starting to remember things. Okay, so let's point this out. This one. There were entries on this, so I do remember having drawings. This too. Price mitigates that. No displacement, no displacement, no displacement. Takes a couple of highs. Displacement on this. That would have been a lovely entry to take. Starts going lower. And then it mitigates this. Another fair value gap here. Starts going lower, but fails later on. And overall, both of them would have failed. Because this one, yeah, I mean, my stop loss would have ended break even already, or closed probably due to the entire thing, you know, but yeah. So overall, I do believe that Friday would have been fine by trading this, because direction was clear. It was just going lower. You do get some nice run on buy side liquidity before actually continuing lower, which is something that we would have gone for at the very least, right? And basically just creation of fair value gaps, which is ideal and necessary for us. Lower time frames were a bit complicated due to this potential loss we would have taken there, but overall quite good. This day was complicated, but could have taken that sell. In my opinion, there are much better days to trade from. Honestly, like it's many days you will have like very clear runs on liquidity, such as this. As an example, this was a very clear run on liquidity. Problem is that will basically happen through London, first of all, right? You have that clear run on liquidity, then you have the displacement, comes back down, lower time from entry, and that's it. You know, it's pretty much what you look for. But in this week, this was a pretty bad week for me. Not in amount of losses or anything like that, but overall, I just was very lost most of the days. And the only very clear day was Monday, in my opinion. We had a somewhat clear direction due to the sweeps on liquidity below this low, below this lows, and all, and just a continuation higher, right? Just creation of fair value gaps, price respecting them, giving us a lower time from entries, and target would have been hit. Again, complicated due to this, missing it out by literally ticks, but overall a very good target, right? Very good target. So that's pretty much it. Kind of wanted to go through this week's price action. We never really got anything very clear this entire week. Again, only Monday was interesting, honestly. The rest of the days were complicated and with too many loops to get to where we want to get. But it is what it is, you know? So that's pretty much it from me. Hope you enjoyed this video. A little bit of a long one, but at the same time, it's 5 days, so it is what it is. I'll see you on to the next one.